Hey, everybody. Welcome to the Practical Founders Podcast, where every week we hear an amazing story from a serious founder who built a valuable software company and did it without big funding. This week, my guest is the co founder and CEO of PFA Solutions, the makers of Firmview software, Richard Change. He just sold the company to a private equity backed strategic company, Allvue, that also serves the private equity industry. So, this is a bootstrap founder that grew a very valuable business, took on some royalty based funding, RBF, from Cypress Capital, non dilutive funding, non equity debt like funding to help grow as they got bigger. And succeeded with a great acquisition outcome. Yeah, the irony of a bootstrap founder serving the private equity industry and being acquired by private equity backed companies here. Really did great, and he shares a wonderful story. Hey, Richard, welcome to the Practical Founders Podcast.
Excellent. Thanks, Greg. Thanks for having me.
Yeah, it's good to see you. Really interesting story. I've been thinking about it since we first met here. You're a bootstrapper and you use some non dilutive funding to not have any equity, but you're served the private equity community and sold to a private equity backed
Yeah.
strategic and all of that. So we'll have some fun talking about what you know about the private equity game and how did you stay off the drugs for funding so long and so forth here. So
Sure.
you had a recent exit. Does it feel real yet? This is basically a month or so ago,
Yeah. No. I think
or partial
there.
exit.
Yeah. I mean, there's some, a piece of being surreal.
Yeah.
This happened. It did happen before the timeline I'd put in my head that
Yeah.
we
Okay.
would be 2 years away from this, and
Yeah.
so I did think that we were a natural acquisition target for one of the firms, one of the vendors in the space. So,
Yeah.
I did think that would be an eventuality for us for sure. But as I sort of, it was consummated, the deal was done. I think the unique thing is I'm back to work,
I
looking to
know.
grow this some
Isn't that
more.
funny?
And so that's really, celebrated, but then now it's really sort of back to work and see if we can grow this thing some more.
Yeah. So you grew your company, PFA Solutions, and I guess, can we say 2015, it was a software. So basically 10 years of software, and you had some services, consulting services before that. And you sold it to a private equity back. So you get to take some money off the table and roll some more, and you get to keep running it now inside a bigger organization. Has your life changed a lot? Like your bank account has changed, and maybe somebody else, pushes the button for payroll,
Yeah.
checks and things. But has your life changed dramatically yet?
No, it hasn't, and I think you nailed it. I mean, someone else will push the button for payroll.
Yeah.
I don't have to spend time, worrying about, operations that, weren't value add from a business or a growth
Yeah.
standpoint. So, I still keep my eye on them, but it's not my daily anymore. And so I can offload operations, I can offload payroll, 401k, dealing with healthcare benefits. So that those are the things that I think, really will allow us to accelerate growth for sure. But, and then also those are things that weren't my forte. I
Yeah.
love product, love technology. And so I really wanted to spend more time there, uh,
Yeah.
and not battling on some of those other things.
I've been through the acquisition thing twice, uh, leading the charge, and it's not a small amount of work to take a business and integrate it with another business. I mean, literally, the things you did without asking anybody, now you have to plug into the whole system. I'm sure there's people show up and say, "Give me your payroll, and we'll take it
Right.
from here," or something. But like, is there a lot of integration work? Meeting with, now you were acquired by Allvue, Allvue,
Mhm.
which is owned by Vista Equity Partners, private equity partners. So a strategic, private equity funded strategic that acquired you and added your smaller company to the suite. Do you
Mhm.
have a ton of this kind of integration, the synergies and cross sells and sales teams and all that
Yeah.
stuff we've always done?
Yeah, no, I mean, I think that was the attractive part of this. Really, there was a ton of synergies. If we think about, alternative investments as a whole, and that's consist of your traditional private equity, venture capital, real estate plus credit funds. And so they kind of make up alternative investments. And so
Yeah.
what Allvue really sort of focused on was the credit and traditional PE from a fund accounting standpoint. Our solution tucked in really nicely because it's the other side. It's the investment managers or the GPs accounting that we focus on in their compensation. And so the
You
synergies,
might say it's what they really care about, but yes. Okay. Yes.
Yes.
Right.
It has a material impact for sure on the people and employees there. So
Yeah.
yeah, that's the piece we focus on. And so, it was completely underserved. And so we've, really sort of made our bread and butter there on just making sure that people can move past Excel
Yeah.
when we talk about managing a lot of this information. And so as, these firms grow and scale, they outgrow Excel, honestly. And so,
Yeah.
it becomes a bit of a challenge to continuously manage this. And so, what I think was nice here is that they manage the LP side from an accounting standpoint. We focus on a GP side, and together now, I think there's a great holistic solution that firms can now reach out to us and hey, have one consolidated platform.
Yeah. So the LP is limited partner investors, the
Yep.
investors that pile up these whatever $1 billion funds,
Yep.
the pensions and the state funds and so forth. But so that is how they manage the money from their investors, and you manage the money on the front side of the house for, as you say on your website, carry and compensation, which is in the private equity world how these private equity firms make their big money,
Right.
right? Their fees
Yeah.
and how they divide up the spoils when a deal
Yep.
is done, and all of that. And it's really big money.
Yeah.
There's a lot of big money sloshing around, and it gets divided up. Of course, the investors get paid back, but then there's a
Right.
prize in it for the
Oh
people
yeah.
doing the deals and running the business.
Yeah,
Yeah.
it is. And I think the first, reality, check, I remember this years ago during my time at Carlisle, and you're looking at the big numbers,
Yeah.
and your eyes pop. But to your point, this is 20% of the profit. The 80% went back to the investors plus
Yeah.
their original, capital invested. So,
Yes.
yes, they are big numbers. Don't get me wrong. But,
Hmm.
you think about how waterfall actually works it's after the fact. And so, they're only in that position if they've done a good job. And so,
Right.
that's the reality check a bit as well, too.
So your software, just PFA Solutions, and I guess it was called Firmview, right?
Mhm. That's correct.
So the Firmview software was about when a private equity company buys a company like Allvue or something like that, and then eventually sells it. How does
Mhm.
the money get divided up, and who gets what on the
Yeah.
front end of the house? Investors get their side, but and there's I guess there's a magic math to all of that, right? The big pile of money in the middle of the room, and who gets the
Right.
first cut, and who gets the second cut, and the GPs, the general partners,
Yeah.
and the people who worked on the deal, right?
Yeah. Yeah. Well, and then you think you kind of nailed it too here. So that percentage of profit. And so the basic model is what we call a 2 and 20 model.
Yeah.
So meaning 2% management fees are paid to the general partner and then 20% of carried interest. So if a deal, to your point, exits at some point, 2% of management fees have been paid in order to source, fund, and transact
Hmm.
the deal. And then if the deal, let's say sells at twice the value that the capital was invested, 20% of the profit goes back to the general partner. The 80% goes back to the investor plus the fees, that they
And
paid
that's
into the fund.
whatever, 2 or 3 or more percent fees every
Exactly.
year. If you raise
Exactly.
$1 billion, that's 30 million,
Right.
to finance whatever, like, the
Exactly.
12 people,
The 12 people.
Yeah.
And, I think the thing that makes, what we do unique or what makes this model interesting is that, for that 80%, it's easy to do the math to say, okay, hey, Greg, you
Uh,
committed, $1 billion. I can do the math quickly and say, what's your pro rata share
I see.
of this distribution? That math
Yep.
is easy, right? It's
Yep.
based on committed capital, capital
Yeah.
invested, or the cost of the deal. But on that 20% side, it's arbitrary.
Yeah.
It's not based on, anything but, your role in the firm,
The
how I think
pecking
you've
order,
done the
right?
pecking order.
Yeah.
Exactly. And so, the math and the allocation logic is completely arbitrary. And so managing that over time is what we help our clients solve for.
Well, and people know this in firms like law firms and private equity firms, right?
Yeah.
It's divided up. I'm an investor in a bunch of small seed funds for, practical type. I get my checks once, a
Yeah,
transaction happens, but there's usually one investor, the one GP, general partner.
yeah,
They're, running the deals, or one, on the venture side. That means you're serving larger companies where there's bigger funds, bigger distributions, and bigger teams where it gets quite complicated, right?
yeah, exactly. And so you think of, you look at the website, there's household name private equity firms that utilize our platform. And now you're talking, hundreds of people, if not thousands, depending on the firm. And the key thing there is that you're managing those allocations of carried interest over time.
Hmm.
Plus, sometimes, there's pieces down at the
Oh
deal
my gosh.
level. So there's an
Yeah.
incentive there. And then the most complicated part of it is when people leave and people come to the firm, right? So how do you handle the vesting?
Right. And who
And
gets
so
to make the rules? Oh
there
my
you go. And
gosh.
so then also, what about forfeiture? So, Greg, you were here for 3 years, not five. So there's 60% that you get to
Yeah.
keep. 40% goes back where? Who
Right.
gets that 40% that you're giving up? And so,
Right.
again, that's what we're helping our clients solve for. It's really
Oh my
managing,
gosh.
the ins and outs when we think about those allocations to the employees and partners of the firm.
Right. Well, I haven't met a serious private equity investor, general partner, one of their senior people on the team that's running deals that doesn't know how much they're going to make when they buy a company and take it to a certain level, sell it again, go public. They kind of know that they're going to buy a plane with it or something like that, right? There's, in the bigger deals, the bigger numbers.
Yeah.
So that's really interesting that you're in that. And of course, it was all spreadsheets. So you created a successful vertical software company and you
Mhm.
sold it for a big price. Can you say how much you sold PFA Solutions for? I know it's probably a little bit now, a little bit later, this first bite of the
Yeah.
apple private equity style deal. What can you say about it, Richard?
Yeah, so, it was north of 10x from a multiple standpoint, and so, I think we
Can you say more than $100 million, something like that? Or
less than 100,000,000,
okay, great. Yeah.
less than 100,000,000,
Okay.
and so, given where our annual recurring revenue was, it was still
Yeah.
north of 10x, and
Yeah.
so, for me, I think that was, the right time and the right number that
Yeah.
helped consummate the decision. I
Okay.
did feel like we had, a lot of wood left to chop, and so, we knew we could
Okay.
still grow for sure, and so they saw value in that, and so, they helped on the price, as
How,
well too.
that's great. So you did that kind of thing. If you really want it, you got to pay for the growth I'm expecting, some portion of that. I don't have to spend the next 2 years building that, but I'm not going to sell it for my current,
Right,
average multiple. You got to pay
right.
a premium.
Yeah,
Is that right?
that's correct, that's correct,
Okay. Well,
that's
that
correct.
does happen then. We
Yeah,
get to hear
no,
that.
it
Right.
does. It
Yeah.
literally does, and so, I think we were fortunate. They're a great team there. They saw value in the product. I think it complemented what they were doing, and so, I think it just speaks to what, myself and the team were able to build over the years.
It really does, because you're, being acquired in the industry you serve. So it's
Yeah,
a stamp of approval
yeah,
that people said, yeah, we'll pay the premium to have it now and not have one of our competitors get it. That classic FOMO, fear of missing out kind of
yes.
thing. Can you say, I mean, you're working as the CEO, running the PFA Solutions business, now part of Allvue and
Mhm.
all that integration and so forth. Maybe Firmview, the product stays, and PFA, the company goes away. Is that the
Yeah.
story?
So
Or
that's the integration portion that you mentioned earlier. So
yeah,
that's things we're working on now.
okay,
So given that this is, just over
early.
a month old,
Yeah,
that's our plan. And so, for me
yeah,
to continue to kind of run PFA Solutions underneath Allvue.
yeah,
But as far as the long-term strategy, does it fold completely into the firm? We'll see. And so I think it'll just time will tell there, as far as how we integrate completely within their ecosystem.
yeah.
But yeah, it's ongoing.
Well, this is an old joke, and it started in the early '90s, and people have been telling it since then. But you can apply it for any deal that happens. What do you get when you cross PFA Solutions and Allvue, the acquirer?
What do you get?
Allvue.
Oh, that's it. Yeah, you're right. Yes, yes.
Right? They're
Yep,
the
no,
acquirer, right? And,
yep, yep.
they'll run it independently, but at some point,
They'll bring it into
Allvue
the fold.
customers want to have one, one vendor
That's it.
and all of that. So, and they bought you, so you get to play, play at least most of their game. That's
Absolutely.
probably there. And given that you're still running the business and probably have some targets there and some goals to achieve, means you didn't sell all of the company, which is typical in a private equity
Mm.
backed deal. Did you sell most of the company and roll some
Yeah,
of that?
we
Yeah,
did
that
roll
kind of thing.
some.
Hmm.
Yeah, we did roll some, and so, I think that was important, really because we wanted to, again, see, where we could grow this thing to. We
Hmm.
really did feel like we were on a nice growth trajectory. I know we'll talk about,
Yeah.
the funding that we did do, but that was also, I think indicative of where we were going with the business, just looking at ourselves. And so,
Yeah.
looking at the business, we've been at a clip at about 50% ARR growth year over year.
Yeah.
And so for the last several years. And so, I feel like we can still achieve that, and then probably can do a little bit better than that, given now that we got the backing of Allvue. We have
Right.
a dedicated sales team.
Okay.
Sales was done between
Now you're one of many products that they
yeah.
sell. So I've been there. That's a
Well,
good one.
yeah, well, and then the fact that our sales team was myself and 2 others who also had daytime jobs, and
Right.
so, I think now you have people that actually have, they do is sales. It's gonna be a
I know.
tremendous.
Imagine that.
Yeah, yeah, you're like, "Oh,
Well,
that
welcome
exists."
to it. Now you're playing the mindshare game with the sales team.
Yep,
Right? To get their
yep,
attention, to get their focus, to get their understanding, have
yep.
them understand what this damn thing is that they didn't know anything about, and why, it's a smaller deal size than their other thing or something like that. So you gotta
Right.
get, gotta incentivize them in the right way. Do you have it in your head, as many do, acquirers and acquirees and so forth, that oh my gosh, they have 1,000 customers and we only have 100. If we sell our product to just 10% of the customers, this ought to be huge. Or the sales force, if one out of 10 deals is a
Oh,
firm view.
yeah.
I mean, do you have those math? Like you've done the spreadsheets and
Oh,
they're pretty good.
absolutely.
Yeah. Okay.
Yeah, that was part
Very
of
good.
the due diligence,
Yeah.
right? And so just thinking about where there was overlap from existing customers, where
Right.
there was net new customers. So there's a good amount of cross-sell
Okay.
opportunity that we saw for sure.
So you got a strategic kind of multiple, wasn't like a 3, 4, 5x, and this is a
Mhm.
strategic deal. Do they have far more customers than you have?
Oh,
Yeah,
yes.
in the private equity world, these kind of alternative investment world. Yeah. So
Yeah, they did.
yeah, that's
Yeah,
very
far more
exciting. How many
customers.
employees did you have on the PFA Solutions Firmview product business?
So we
Everything
had
told.
34 employees,
Okay.
and we had 61 clients, so 61 customers.
Okay. Yeah, and I'm hearing you had a number that said someday it'll be worth this, and then I'll take the money, and they jumped the gun and got there faster than
Yeah,
you said, like a couple of years faster. But you were kind of leaping forward a couple of years and
yeah.
saying on average. So isn't that interesting? So sometimes it happens that way. Somebody jumped the gun and paid a premium, and sometimes it doesn't happen that way. So you did really well.
Thank you, thank you.
Yeah. So let's talk about how you got this thing started. Like you didn't have venture funding, seed funding, angel funding, and so forth.
Yeah.
Uh, and you found an opportunity here in a really big industry, but it
Yeah.
was, deep into a big industry. How did you start this company, Richard?
So
Yeah. Yeah. Back to the days. Okay. I want
yeah,
everybody
yeah,
to
no.
hear like how that felt back then. This is
Yeah,
Richard
yeah,
looking back. Yeah.
it's probably, a good amount of emotion there, but it
Yeah.
wasn't looking back on it now, Greg, honestly, I think it was, circumstances plus the fact that I did feel that it's something that we could be successful in if done
Yeah.
correctly.
Yeah.
And so, I did feel that the industry was completely underserved from a technology standpoint.
Hmm.
Again, Excel is the dominant software tool that
Yeah.
everyone utilizes. And so I really did feel like there was opportunity there.
Hmm.
And so, how do you take that idea now, create a company and create a product eventually that you can serve back
How
to?
did you find this idea? This is the classic paradox. There's all kinds of problems in the world. You just can't see them from way out
Yeah.
here. And like, what were you doing that you discovered this
So
opportunity?
the I guess the first incarnation of this was, even during my time at Carlisle, when I was
A
there, the
big
Carlisle Group,
one
a
of the
big,
biggest private equity
right,
firms, not just tech
yeah,
private equity, but they're
and
buying auto companies and
yeah,
other things like that. But
yeah. But one of the challenges that we had, I was working in their IT group. I was their chief application architect. One of the challenges that
You're a coder guy. You're a
yeah,
computer
yeah.
guy,
So
right?
just,
Computer scientist.
manage
Yeah.
a team of developers. We had consultants as well that rolled up to me. And so one of the challenges that we had was pretty eye opening. We had one of the founders reach out and say, "Hey, we want to see a list of everything that Carlisle owns, a distinct list of
Duh.
investments."
Yeah.
And I'm like, "Oh, of course, yeah, we can go to this system or go to that system." Well, as I started looking at the information, no system actually held, a distinct list. And so the fund
Mm.
accounting system, they had fake deals in the system to, facilitate fund accounting. The management company system, which is another general ledger, had project codes because before a deal is ever a deal, it has a project name because you don't want to
Mm.
necessarily put out to the world, this is something that you're going to be investing in. And so, even internally, you want to keep some of those things, pretty close to the
Yes.
vest.
Uh-huh. Mhm.
And so, it was eye-opening in my regard because we couldn't produce we have all these systems and we couldn't produce a distinct list of, "Hey, this is everything that we own as a firm." And so I looked around at our peers and, kinda had this discussion as well, and they had the same exact issue. It
Mm.
was really around data management. So much data was buried in Excel. There was a spreadsheet walking around that had this information, but it's only as good as the last save, when someone did it and made the last update. And so I saw then that was a data challenge with the industry over reliance on Microsoft Excel. And so when I thought about that, well, there's a way to solve that. You can definitely solve and have one centralized data repository where this information exists. So that gave me the first idea of, let's figure out a way to sort of standardize this information so it can be easily shared.
And how long were you like, you were the custom app builder guy at
Yep.
Carlisle Group, right? Not,
Yep.
right? So, like, we need an app for this, right? It's,
Yeah.
so you had this pile of requests and you were building apps and one, kind of stuck out at you. How long were you doing that at Carlisle Group? Was that a long time?
Yeah. So about 6, 7 years.
Okay, right. So you got to see the inner guts
Yep.
year after year after
Yeah.
year, the problems that keep showing up that don't get solved right away.
Yep, absolutely,
Interesting.
absolutely, and so those were the things that opened my eyes, and it also, I think the benefit too was that you got a chance to see the challenges not on just the back office from an operational standpoint, but you got
Mm.
to see some of the challenges on the front office, and so,
Darn front office, all the people
yeah.
running around.
Yeah, and so, I mean, even thinking about something as simple as the relationships from the banking perspective,
Mhm.
which banks helped us, fund this particular deal? How do we keep track of that?
Yeah.
Yes, I have a pipeline sitting over here, but the deals that we do, we have a great list of those, but what about the deals we didn't do? Do we have those, the dead deals?
Mm.
And so again, those were things that I saw that opened my eyes. Like, all right, well, there's a wealth of knowledge there because if we did this, diligence on this particular deal, there's still a lot of good information that we
Yeah,
can use
uh-huh.
for a similar deal. How we're going to structure it, things like that. Who are the banking partners we're working with to fund that
Mm.
deal? And so those are things that I helped solve for, while I was there, is essentially managing that collateral. I'm thinking of ways to streamline that and surface that information so it can be
Yeah.
found later.
Wow, great. Did you, quit your job and start this opportunity or, how did you get up and running with this, coding the first version yourself, and
Yeah.
I don't know. How did you do this?
Yeah, so, I think it was, time to leave, end of 2012, and so I had a couple guys that left with me, and so, they like, "Hey, we joked about this at lunch, there's no reason why we
I
shouldn't
dared you.
start a
Yeah, right. Uh-huh.
So, they called my bluff essentially,
Yeah,
and
uh-huh.
so, I went ahead and said, Let's go ahead and do it." I think looking back on it, probably deemed a little bit crazy. I was
Yeah.
finishing up my master's at UVA,
Mhm.
in information technology,
And
and at
that's
the time,
University of Virginia, so
yeah,
you're in the
sorry,
DC
University of
area,
Virginia.
the
Yeah.
Washington, DC area. Yeah, mhm.
At University of Virginia, and then, my wife was 6 months pregnant, so
Of
why
course,
not?
it always happens the same
Right,
way,
right,
yeah.
right, with our 3rd child on the way, so why not start a business?
Wow.
And so, yeah, that was probably a great motivation,
Yeah,
to make sure it was successful. And
yeah,
so, we knew we had a product in mind that we wanted to build, but at the same time, we knew we didn't wanna go the funding route and try to raise capital, and there was 2 reasons for that. One,
okay.
kinda knew how those things worked.
Yep,
Yes,
you knew
it's
the
money.
game. Yeah,
You knew the game.
yeah,
It doesn't come free. There's strings
perfect, yeah.
attached.
Mhm.
And then I think the other thing too is that we had a mortgage to pay, plus the other guys that left with me. So we all had bills to pay as well. And so our goal was then, okay, well, how do we go ahead and, drive income, get revenue in? And so we started consulting back to the industry. And so we knew how to build systems that the industry needed. We knew how to do integration, system implementation, reporting. And so that's how we got started. So essentially bootstrapped ourselves for the first
Hmm.
few years, taking project-based work. Once we got in, I would say a good book of business there, we started hiring developers to build out our platform, Firmview.
So you built a service business first, like, as
Built a
a
service
corporate
business first.
refugee, right?
Yep.
Like, and you didn't believe the simple myth that, have an idea, it'll be big someday. Of course, everybody will fund me, quit my job and,
Right, right.
jump there. But you filled it in with services. Did the idea that, let had you guys leave your jobs to start this, did that eventually come out as in the frame that you had expected, or did it change forms? And I,
It
d-
did. It
yeah.
came a little bit quicker. Well,
Oh.
two things happened. One, we had a client that was really interested, that we were doing services work for and what we were thinking of building. And
Mm.
so they also, I'm like, oh yeah, that'd be great. We need something like that. And so, we need carry management. And so that really got us going like, okay, well, this is something that we knew really well anyway. And so let's go ahead and build out this platform. And that got us started, honestly, Craig. And I think one of the things that, we realized was that this was a systemic problem. So, the industry wide was still struggling with Excel, and we were surprised, like, hey, this is something that we built years ago at Carlisle. Like, how, everyone else, are you really managing this on
Ah.
Excel? And
And you might
so,
not have seen it in the same way had you not
no,
consulted and had those deeper conversations and sitting in the
no,
room for hours with people,
yeah.
working on problem solving. Yeah.
Exactly, exactly. And
Mm.
so, I think, the next things that we did were really trying to build a model and an application that scaled, that was truly a SaaS-based solution. And so,
Did
you
you do that one-off thing and then it kinda worked and then you went and built it as a
know,
more scalable thing, as you say, or
yeah, well,
Yeah.
I think at the time we were always, contemplating it was gonna be a SaaS solution.
Yeah.
How do we sort of build this at scale? But to that point, I don't think we were, extremely thoughtful about just the magnitude and scale that it could grow to.
Yeah.
So we did have to go back and refactor things here and there and think about, how we truly sort of, serve this to our clients globally as well.
Yeah. So I'm just thinking about that. How long did it take for you to quit your job, do consulting, and
Mm.
then, let's say, get up and running with the Firmview, software? PFA Solutions sounds like the services company, right? But, maybe it's all your initials or something like that. But, like, how long did it take you to get up and running with a software business? Was that
We started developing the platform in 2015. We started PFA Solutions in 2013.
Yeah.
So we hired our first developers actually at the end of 2014. So
Yeah.
within about 18 months, we were able to, start taking the consulting revenue and start hiring developers to build out the platform. At
Mhm.
the same time, we were still consulting. And
Yeah.
for us early
Like
on,
you personally consulting, right?
me
Instead of yeah,
personally,
yeah.
yeah, yeah,
Mhm.
yeah, yeah. My luggage bag has the miles
Yep.
on it.
Yep.
So the streets of New York and everywhere else,
Mhm.
it has seen a lot of places and a lot of hotels. But yeah, that was me on the road, consulting, and I think also too that was part of what we saw as our gateway into a lot of companies. I think it's depending on the company that you're working with or looking to sell to,
Hmm.
we're an upstart. So, it
And
takes
these
a
are
lot of
massive,
trust.
like $1 trillion,
Yeah,
assets
yeah,
under management and all these big shots,
yeah.
and you're, 4-person company or
Yeah,
10-person company, something like that, so
exactly. So, they don't necessarily write big checks to, a vendor with 4 people, and so we, had to sort of prove ourselves, so the consulting
yeah,
was a gateway into a
yeah,
lot of those firms, and, we proved ourselves there, we told them about our platform, and, like, "Alright, well, we'll give it a try," I guess the rest is history.
oh, well, yeah, a straight line and everything, yes. Well, congratulations, you did that corporate refugee thing, right? See a
Yeah.
problem in my industry, solving with spreadsheets poorly, magically everybody's got this problem, and you did it. Did you have a high confidence about that? It's easy to have a high confidence saying, "Oh, I know this problem deeply. I dealt with it for years in this company. I talked to 10 other people. I speak the language. They recognize it right away. I know the language." Was it did you and the other guys that started, did you guys say, this is a no-brainer, we're just going to do this? Or were you humbled along the way thinking it isn't exactly what we assumed? Or, it took you a while.
It took us a while, and I think we were humbled, really, because we started with the carry management. We also started with another module called performance management, which I felt
Mm.
was a no brainer. To your point,
The
so that's
no-brainer.
yeah, that was our no brainer. Meanwhile, the carry and compensation was really, the one that did it for
So
us.
performance is like, how we doing, right?
Yeah.
Yeah, which did you think everybody wanted that and it didn't turn out to be that way? Yeah.
Oh, absolutely. I think everyone
Oh.
was looking to solve, for some of the things that we ran into when we were at Carlisle. It was just, where's
Oh.
my data? How can I see this thing in a way that makes sense? Because if you think about a fund, let's say, let's call it Fund 6, and this is for,
Yeah.
Blackstone. You
Yeah.
see it on paper as Fund 6, but in your fund accounting system, it could be made up of, 50 different legal entities. So
Yes.
there's no such thing as Fund 6. You group a bunch of legal entities together to make Fund 6. However, that means nothing to the person in an investor's relations or the deal team member. They just know Fund 6. And so those things are essentially the natural disconnect between from a reporting standpoint and an operational standpoint.
I get it. So is it fair to say that you guys had this no-brainer, where's all our data? We want to see it in one place and get one view of it. You thought that was the problem, and really people said, I just want to divide up the money and counter, is that a version of that? They said,
That's a version of
okay,
that. I think people
good.
saw
It's refreshing for people to hear,
yeah.
right.
Absolutely. I think it was a bigger problem to solve was, okay, well, how do we manage the allocations of carry? And so, we
Yeah.
did gain traction with the performance management module, but that took longer,
Yeah.
for us to get there. And I think we're still trying to figure out what's the long-term strategy there as well, too. So it has
Yeah.
some great potential. So we'll
Yeah, so
see
I
what.
can imagine the confidence you had about it. This performance management thing, which you sound great, and you could have raised money on that easily.
Oh, yeah.
Yeah,
Oh, yeah.
but
We could have definitely.
2 years later, you're like, it wasn't really quite that. But you got the confidence on one thing to be humbled and solve
Yeah.
and listen and solve the trail. So that's very common out there, right?
That and I think the other humbling I'll give you one quick anecdote here. The other humbling thing was that, we set performance management up to be a solution for GPs, but then also for LPs, investors. So the investment
Oh,
firm and then the investors. And so we started talking to the investors, the big, large institutional investors. And what was surprising to me, still to this day, they don't necessarily understand how private equity works. Uh,
they put money
so
in, they get it out, but they don't know how the
they
sausage is made,
they don't necessarily
and they
understand,
don't care.
and they don't care. The returns are great,
Ah,
right? And so, we don't wanna ask too many questions, and
yeah.
so there's a bit of that
Beyond, is this
mindset.
important to you? Would you pay for it?
Yes,
Yes, right.
yes. So there's a
Interesting.
bit of that mindset, and I was, like I said, just surprised. I'm like, "Well, you're allocating 20% of your, your funds to PE, and you're not sure what you own within those funds." And,
Right.
"Yeah, we're okay,"
A
So
black box kind of thing.
right,
There we
right.
go.
So
Well, that's really good. This week's podcast is sponsored by my friends at Cypress Growth Capital. My favorite milestone for practical SaaS founders is after you've survived the first few crazy years and you have some repeatable sales and a growing team and perhaps a little profit showing up. You could grow faster with a little outside capital, but the thought of raising money from VCs would change your whole game. And we know VC funding is the most expensive growth capital on the planet. That's why so many practical SaaS founders I know have partnered with Cypress Growth Capital when they hit that predictable growth inflection point. For 15 years, Cypress has provided non-dilutive growth funding to bootstrapped SaaS founders, including many of the successful founders I've had on this podcast. They love practical founders. Cypress provides enough patient capital for you to invest in your growth without giving up any of your precious equity or having to guarantee a loan personally. Their investment team has people like you who have grown and sold successful software and technology companies, and their operational and entrepreneurial experience helps them give you strategic guidance at those key inflection points in your business. So go to cypressgrowthcapital.com/practical and learn more, and contact Cliff Centel at Cypress to see if there's a fit. Now back to our podcast. how long did it take for the business to get up? Did you eventually get out of your consulting business? And
We did,
yeah,
we did, and
yeah. So
so
what year did you officially close down consulting and said we can pay ourselves and our
mm,
mortgages and have a little team and we
yeah,
think we're on to something?
yeah, so I think it was around, like, 2018, 2019.
So that's
We
3 or 4
felt
years
yeah, so
transition and, where you had both product and consulting.
Yep, yep. So we were
Wow.
able to say no new business on the consulting side. We relegated to just what we call our friends and family.
Yeah.
So, CFOs that we knew really well or companies we knew really well. And so, we would only do consulting work for them. That's it. So we,
Yeah.
we,
No,
we
that
kind of
yeah,
left
just
that
shut it
business,
down. Secret
just shut
code
it down.
required, right? I
Yeah,
get it.
that's it. And so
Gosh.
after that, then it was really just, go, go, go on the product.
Well, Richard, you know the money game. You know you could have raised money.
Yeah.
There was probably people lining up saying, "I would fund that," and you still said no. What was it literally about that that had you say no? Because I'm sure it was hard, right?
Yeah.
Making payroll and making mortgage and pivoting around and doing that kind of thing and dealing with, billionaires and all that
Yeah.
stuff. Like, what was it really? Was it you just a control thing, or
Mm.
you didn't know how big this could be, so you didn't want to raise too much, or because what was it?
We didn't have a need for it. If I'm being truthful. I even think about the conversation I had with Cyprus the very first time.
Hmm.
And, we looked at the numbers. This is what they're looking to do. Non-dilutive debt, by the
Yeah,
way,
yeah. Hmm.
which is great. I told them no.
We'll talk
I
about
don't.
that. Yeah.
I don't know how we'd spend the money. We have a good way to. We're
So
growing
you were
pretty.
a frugal guy. You guys were
Yeah,
making
I mean,
money. The plan was running, and
that's it.
you didn't know what you do with a couple $1,000,000.
No, exactly. And so, I think we were, already pretty lean but efficient. And so, and we still had legacy consulting revenue coming in. So, that helped bridge the gap. So there was no need to dilute ourselves early on in the game because we didn't need the money to survive. And so for me, that was sort of that, well, why do this when you can just continue doing this if you need to bridge yourself?
Well, founders should hear that as well. There's a lot of founders that say, "I can't do it, then I'd have 2 day jobs," right? Like 2 full-time jobs. And I say, "Well, have you ever raised money?" That's a full-time job, and the cost gets
Oh,
higher the
yeah.
bigger you get and all of that. But you always stayed on, "I'm gonna do this," and you stayed on the side of, "I'm not desperate, I don't need it,
Yeah.
and we're gonna do it at our own pace." Was this a new thing for these kind of customers? Meaning you said, "I've got this," did you call it carry management
Yeah.
software or something like that? And they
Yeah.
said, well, nobody said we already got one. Everybody was doing it in spreadsheets. So you were the first
Exactly.
one.
Yep, yep. We
Okay.
we had maybe 1 or 2 that had either something homegrown or we've stolen them from a competitor. The competitor offers this as a service though, not as a software platform, but everyone else
Right.
has been Microsoft Excel.
Right.
And so, that's it.
Well, it's actually kind of proof of the problem if they'll pay somebody else to run the Excel spreadsheets because it's complicated and,
Yep.
whatever, that kind of thing. That's really interesting. About how much is your software what does it cost per year for an average customer? And I know it probably is a big swing of types of
Yeah.
customers, but is this like a 50 grand a year or 100 grand a year or something? Or
So I think our average price last year was about 87K a
okay.
year.
Hmm.
And so one of the things I think I was really intentional about is that we didn't want any BS on the pricing side. We tried to keep it really simple. And
Yeah.
so, we broke the industry up into t-shirt sizes, small, medium, large, and XL. So based on your assets under management, AUM, we divided the industry and said, okay, hey, if you're $1 billion, you roughly are anywhere from 25 to 50 people. This is your price. You're small. If you're larger than a billion to 10, you're medium. If you're larger than 10 to 30, you're large, and anything larger than 30 billion, it's XL. And so that kept our pricing pretty easy to
Wow.
understand.
Yeah.
And when we talk to CFOs, they really appreciate that. There's no other, crazy nuance that's going to happen. No other kickers that come in. There's
Hmm.
nothing by seat. It's really just those AUM thresholds. And so to me, that was something that they seem to appreciate I know I appreciated on the other side when I was,
Yeah. So from
selecting
out
people.
of the gate, you had a, if you're bigger, you're going to pay more kind of thing.
That's it.
And
That's it.
maybe if you grow and, those kind of things.
That's it.
And was it per fund? Is if we have another fund 6 or 7, does it multiply or not necessarily?
No, I mean, if that
Okay.
fund 6 or 7 doesn't push you into the next T-shirt size, then
Okay.
you're still operating.
All right, look at you. How simple. Which is also ironic because private equity tends to dig in and make everything complicated. I'm sure they showed up at your desk and said, "All right, let's break all this. We did a 7 years of analysis on your
Yep.
data, and we're going to go." All right, well, that's great. And was that like a sales driven motion, meaning you and I don't know if who was doing sales, but like knocking on doors and networking because it's a pretty close industry, right?
Yeah.
And it's pretty closed industry, meaning they're not answering the phone, right?
Right.
But how did you guys go to market with this in the
Mm.
beginning to get up to 1 million?
Yeah, I mean, really, it was, whatever we could leverage in our network, was a
Yeah.
start.
So
Since
okay.
we were consulting at a lot of these
Ah,
firms anyway, again, that was
okay.
right.
There you go.
I had one CFO call it, it's like, "That's your gateway drug," that's
I
how
know.
you
Of
get
course it
people.
is. Yes. The answer is yes.
Our consulting is the gateway drug,
Yeah.
and
Uh huh.
so, that got us introduced to a lot of firms, and it's no secret people move. The
Yeah.
industry, to your point, is
Oh,
closed knit. So, you have one guy who's, a controller here at this particular firm. They move over, now they're CFO at this smaller firm, and so
yeah.
that's how we were able to sort of, grow really through this network effect.
Right. So everybody on the team and one person moves. They
Mhm.
are like, where's my compensation? And
Yeah.
Karen, my number. I want to refresh my number. But
Yeah, I got a
um,
call. Yeah.
it reminds me a little bit of Carta, which does all the venture and seed investment
Yep.
for the investors now, and it's this central place. And any angel investment. My docs are in Carta, and
Yep.
everything cycles around notifications and all that stuff. You're kind of this central repository, and everybody sees it, and so forth. Is there an analogy with Carta?
Yeah.
For your kind of non traditional
Yeah. I mean, I
investor?
think it's similar. I mean, to Carter in the sense that it's equity compensation. It's not necessarily in the same form as obviously your
Yes, right.
cash,
Yeah. Hmm.
but the structures are a little bit different. The payouts are going to be different
Yeah,
as
but it's
well
just like
too.
the place. Everybody just uses it, right?
Exactly.
Yeah.
Everyone just
Okay.
uses it. And so, I think more importantly, it's really what we see, honestly, Greg, is that a lot of firms want to give that transparency back to their
I
employees and partners
know.
of the firm.
There
So
we go.
it's a bit opaque in some firms,
Yes,
honestly.
even inside the firms, it's
Oh
definitely
yeah.
opaque outside, and the
Yeah.
government's coming after that one, right?
Yeah,
The
yeah.
opacity
It
of it.
is. It is. It
Yeah.
is. Can be pretty opaque, and I think honestly, it's not necessarily it's not intentional. I
Hmm.
just think there's complexity there,
Oh, it's very
right?
complex.
And so,
So, if you had 100-ish customers after this many years, so that's what did we say? 20. When did you start selling the Firmview? 20,
2018.
2018. So 2024, that was kind of 6 years or whatever.
Yep.
Like you got to 100 plus customers. How many could you have if this thing grew and you got to be the
Yeah.
market leader that everybody needs and well, that kind of
Yeah.
thing, which I'm sure there's a vision out there for that. But like, are there thousands of these companies or tens of thousands or
There are. I mean, so
wow.
I think if we look at our TAM, the high side is 8,000 different firms.
Okay. The
Um,
total addressable market, which in
Total
some
addressable.
markets, like,
Right.
there's millions or whatever, but
Yeah. No.
there's only 150,000 dental offices in the United States or whatever. And you got, 8,000, right?
Right. Right.
So, it's almost finite and they all go to the same conferences and some version of that. There's different flavors, I'm
Yep.
sure. Did you end up being for a certain type of private equity firm in the beginning? Like it's not
Yeah.
one of every type of private equity firm. You
No.
probably leaned to a certain kind of firm that did it in a certain way. Or what was
Yeah.
the common denominator between your customers that made them, you know,
Yeah.
attracted to you?
Honestly, it's going to be size and complexity.
Okay.
So typically, those ones that were, 10 billion to
The
30.
bigger the better. Start at the top.
Yeah. They had that sweet spot where, they are north of, let's say, 150 employees and partners in the firm. They are probably on, maybe their eighth or ninth fund.
Hmm.
Now it starts to become a problem. And I think one of the other things that helped us, COVID was actually a pretty good accelerator for us
Hmm.
because a lot of what we do is handle those year-end statements that tell you what your carry's worth. Well, a big
Ah.
change was that no one's in the office anymore, right? And so
Oh,
how do you
you
have
can't walk over to the
you
controller
can't
guy
walk
with the
over
spreadsheet and go,
now.
"Can you check, double check?" Yeah.
Exactly. So our employee
Wow.
portal allow people to log in,
Oh,
see, you can
good.
have that conversation. And so,
I love it.
2021 was a fantastic year for us. We
Okay.
really grew leaps and bounds
All
then.
right. So money came in and,
Yep.
things exploded and everybody was remote. So the
Yep.
problem multiplied.
Probably
Interesting.
multiplied. So that was a
Yeah.
great growth year for us.
So
Absolutely.
I'm just thinking it's got to be a really big number. Assets under management is the pile of money that they have to invest with these kind of private equity firms. What's the total assets AUM for your customers? It's got to be hundreds of billions or something like that, or
We're at 1.3 trillion last aggregation.
okay.
So yeah.
That's the first time the T word has been dropped on your
Yeah, yeah,
podcast there,
yeah.
but like, yeah, and you're, so 1.3 trillion, and then there's a 2%, 3% fee on that, and then the
Mhm.
payback on that 20%. So these are really big numbers, Richard.
Yeah, 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 big, big,
Wow.
big numbers, big
Right.
numbers. But yeah, I think we crested over a trillion last year, and so I think this year we'll see how far we get, but
Yeah,
wouldn't be
no
surprised.
pressure. I'm not gonna ask you what your quota is, throwing the rockets at the bottom of the hill,
Yeah,
for the
there's a
year.
forecast meeting later on that I can get you to
Yeah.
join in on as well.
Yeah. So we're kind of sounding like a straight line. We did this, consulting
Mm,
thing. We found it. We finally found it was about the compensation and carry,
yep.
and we started selling it. Was there any adventure in there before before the COVID pandemic changed and tech boom gave you a boost? Was it, you know?
No, that was really it. I mean, I think that was,
Mm,
the moment where it really started to crystallize a bit, not being in the office to have those conversations with people.
interesting.
The other item was, well, the great resignation area. So, you think
Yeah.
about that time frame during COVID, people were
Hmm.
quitting, uh, private
Oh, and
equity.
yeah, right. Moving around, all
Yeah,
that
they
stuff.
weren't
Right. Yeah.
immune to that as well either. And
Yeah.
the challenges was that, well, they couldn't tell employees and partners, what was on the table as far as what their
Ah,
worth was, what
yeah.
their carry was worth. And so
Right.
if we can provide that data back to them and, a consolidated statement, it's a more meaningful conversation. And so,
Yeah.
those were the things that help us drive, growth during that time.
Did you have a significant onboarding? Like, all right, we have this central system in a structure, and you have this data everywhere. And like, did you consult with them to feed the data and make sure the math worked?
Yeah, no, that's what we do first. So we sit down and we roll up our sleeves. We look at the Excel models that they have. We try to understand,
You have a
what they're.
team do that, like yeah,
Yes,
okay.
we have a team do that. I will do that in some cases, just depending on the client,
Yeah,
and try to understand what they're doing, how they're doing it, and the frequency in which they do it. And
yeah,
so those are sort of the key points and drivers for us.
I see.
Once we understand that model, we essentially, out of the box, 85, 90% of what we see is pretty much out of the box. There
Right.
there are some nuances. So again, because allocations of carried interest is arbitrary, well, that gives everyone the ability to kind of do it, their own unique way. And so
Like every VP of sales has a different kind of funnel approach, right? Yeah, okay.
right. The fund accounting side's easy, right? It's
Yeah,
it's allocation based. The numbers are straightforward. But when we think about carry, it's whatever you've decided, right? And
right.
so the vesting, and so the VC community had us, really enhance our vesting model because they have performance based kickers.
Oh, right,
And so it's just not time based vesting. So it's not
right.
based on, hey, Greg, you've been here for 4 years. That's 25% a year. A lot of our VC firms have performance based vesting as
So
well.
you had to think through,
Mm.
okay, we're going to get into the vesting thing. What are the 17 ways that people do it? And what are we going to build this that supports, all
Eh,
17 of them or most of them? And you
exactly.
didn't do this one-off thing and then evolve it. You guys got this kind of thinking through. We're going to come up with a common system for it, but give you the ability to do it your way.
Give it the ability to do it that way, and then your way. And then I think also what clients really like is the fact that since it's a SaaS based solution, they're able to get new features in the platform that they may not be ready for just yet.
Hmm.
So, case in point, they could be doing time-based vesting. Well, someone else, had us build out performance-based vesting. And so
Mm.
now they can leverage that capability as well too. And so I think you'll see in this industry, it's closed in the sense that
Yeah.
not a lot of people talk to each other, but they're all facing the same problems. So we've been able to kind of bridge that gap and say, okay, well, your peer did it this way, or this is how you can do it. And so we do spend some time now consulting back to the industry and kind of advising, okay, well, this is how you can do your carry plan, or this is how you should think about vesting, or, this is how you should handle your late joiners as well. And so
Well,
we've
isn't
got
that
enough.
ironic, right? Consulting with the smartest people in the room, to tell them
Well,
something that might work for them,
yeah,
Isn't
with
that
over 60
interesting?
clients, we've seen a lot.
Yeah.
So yeah.
Yeah. Did you have a co-founder, in the end, or, did you run technology or were you the sales guy? What did your senior team look like?
Yeah, so I had a co-founder early on, but we left. He left back in 2018.
Mm.
Really wanted to focus on just technology in of itself. Whereas I
Yeah.
really felt like from a product standpoint, that this is going to be what we want to do. This is going to help us grow and really be what we wanted. And so it was amicable.
Yeah.
Understood where he
Yeah.
was with his with his life and what he wanted to focus on. And
Yeah.
so just continue to put my head down and, continue to hire great people.
So you didn't have a massive team,
Oh, no.
but you were growing a sizable company.
Mhm.
50%, 50% is going to be quite big. Did you have senior leaders in some departments and not others? That kind of scale?
Yeah. So from a technology standpoint, I had, a great, senior technologist, CTO that
Hmm.
was able to bring on. I also brought on a COO about 3 years ago
Okay.
as well. And so that was
To
huge.
handle other, is that what it
To
was?
handle other,
Mhm.
one thing that became a problem was, managing cash flows, right? And so again, I'm busy trying to sell and implement and get clients, to a happy state. It's hard to kind of keep track of, okay, well, what invoices do we need to send out each and every
Oh
month?
my
And
gosh,
so,
right.
yeah, so, Story Keeler, helped solve that problem
Awesome.
as well.
Were
So
you the VP of sales, main sales guy? Was this founder-led sales, until
this was
recently?
initially founder led.
Well, I'm sure it's yeah, yeah, I
Yeah, yeah.
guarantee you.
And
Actually,
then
that's a good question. Like, at what stage did you stop selling? Was this like over 1 million in ARR? You stopped being the main sales guy? Maybe 2?
maybe about, yeah, close to 2, I stopped being the very main sales guy, but Greg, honestly, I mean, I did a sales call today,
Yeah, I bet.
so it
Yeah.
doesn't
Do you have a
stop.
salesperson or a
Oh, we
sales
do,
lady?
yeah,
Yeah.
yeah, and then
Do you
now
have
with
multiple
Allvue,
or just is it you finally got to say, okay,
multiple. So
okay,
again, the COO did sales. I had another VP of sales who does sales right now as well.
okay.
But again, just the reach and just the number of people that we're able to talk to, it's more
Yeah,
than enough for one person. And so,
yeah.
again, that was one of the things that we really liked about Allvue is that, now we got a dedicated sales team. Now
How
we can
many
do
salespeople do they have on their team?
over 30.
Over 30. Okay, so here you go.
Yeah.
Right. So you'll be the visiting guest appearance on the sales calls now.
That's it. I think
Yeah.
function as a SME, give a chance
Yeah.
to kind of talk about, okay, how does their model fit into our system? What are their peers doing? And then again, I think it's spent a lot of time advising now.
Yes.
This is what we've seen. This is how you want to
Yes, I
add this
get
to your
it.
plan. So
Yeah, consultative sales, right?
yes,
Let's figure out your problem. And if somebody pays you 50, 100,000 a year, they're saying they have $1 million problem that they can point to in their business. And the amount of work we do and the amount of pain that we have and the upside that we'd gain if we knew that better, is that how they perceived it? This is a multi-million dollar problem in their business and we'll pay $100,000 to make it go away with the software?
they do. It's not so much of, okay, this is going to save from a headcount standpoint,
Hmm.
but they see the opportunity costs of
Yeah.
not providing this information back to employees and partners of the firm in a
Okay. So
consistent
you did
manner.
that. It wasn't like a simple expense sale, save
Right.
money. It was look at the opportunity and they could see it. These are opportunistic folks.
That's it. That's it.
Yeah,
And then
that's
it's
great.
okay. Well, our peers were able to do this, so I can't compete, with Blackstone, KKR, or whoever else, for the same talent, because that's really what a lot of
Wow.
these firms are after, right? The same sort of
Oh,
talent pool.
I get
uh,
it. There we go. Twist the knife on them, right?
yeah, and then if you
And you
think,
and the guys over here at Excel KKR are doing this, but you guys don't have to do it. Oh my gosh. Like, I
yeah,
can imagine, Richard.
that
Right.
that's a big key to it,
Yeah, I
right? I
know.
mean,
I know.
their biggest asset are their people, at the
Yeah.
end of the day.
Yeah. Well, let's skip forward. Congratulations. You didn't, have, I don't know. Do you have many scars from this adventure? It sounds like you're
No.
you're pretty, soft spoken about it and straight up, and you didn't do too many crazy things here. You're not a crazy founder here, but
Yeah.
did you have any scars from that growth journey along the way?
No scars, really lessons learned.
Okay.
If I look back on it, I think those were things that could have did a little differently.
Yeah, of course.
You
I
know,
hope so. Yeah.
but at the end of the day, happy with the outcome,
Yeah.
for sure.
Yeah.
But
Let's
it
talk about this. Your outcome and your acquisition by Allvue, owned by Vista Equity Partners, so a private equity owned strategic
Mhm.
that bought you, and as you said, tucking in the Firmview product right into their portfolio. There, did they reach out to you and start a dance with you, or did you shop this, or were you kind of playing all the strategics that might buy you? How did this start to materialize?
No, yeah, good question. They reached out. We
Okay,
had a couple other strategics reach out.
okay,
We were at that point though where, I started looking at growth capital, but luckily, had a chance to work with the guys at Cypress and like
all right.
that.
Let's talk about Cypress, right?
Yeah.
Yeah, Cypress Growth Capital. They're
Mhm.
friends of the podcast here, and I've
Yeah.
I've had Vic and Vince on the podcast
Oh,
as
have
well,
you? Okay.
talking about this
Yeah.
non-dilutive funding as you grow, and you can not take venture equity funding. You took a little funding, a couple million.
I did. And so we looked at that process. We knew we wanted to do debt-based funding.
Yeah,
We didn't feel like we should dilute ourselves at, 2023. 2022, Cypress reached out. I'm like, I don't have the need for the money.
don't
I'll
eat.
call you
Yeah,
back when I do. And so we started looking at the growth trajectory. And, I think I really wanted to pour fuel on on the fire,
it's
so to
working, and you
say.
want to do more of it.
We want to do more of it
Yeah,
because one of the challenges I think every founder has to manage is, obviously the cash flow, but then how can you hire and get to a point you can hire ahead of the curve?
yep,
So meaning we were looking to hire as we close new deals, down there's more revenue, and you're constantly playing that game.
yeah,
Well, the more
yeah.
people you hire, the more you need to sell. And so
Right.
there's this balancing act. And so I think we really wanted to start to hire a little bit ahead of the curve. And so we started looking at debt financing. I reached out and we had several different term sheets come back in with
Hmm.
traditional debt providers. I felt like honestly, and it's not a plug for Cypress because they're a friend of the show, but a lot of the other lenders we felt were really sort of lending by number. So they had
Yeah,
a model, they plug you
yeah,
in, this is your payment, and
yeah.
that's it.
Spreadsheet relationship. Yeah,
Yeah, that's it. So I had a chance to meet with Vic and team and Cliff and Vince. And
yeah.
so
Hmm.
they really understood the business.
Yeah,
Obviously, they are in that business as well,
hmm,
that industry that we serve. And
yeah,
so they really had a lot of value add outside of their capital that we really wanted to exploit. And so obviously the relationships, just someone we can have a conversation when I can pick up a phone and, kind of
yeah,
help us think through problems that we're having. And so that was extremely, I would say, attractive at the time. And so, we
yeah.
told the other guys no, we went with Cypress and it didn't look back.
Yeah, and a lot of people say that we're more than just the money,
Yep,
but you wanted something more than just the
we
money,
did.
and you felt like you got it, I guess, got savvy support.
Absolutely. Absolutely.
Okay.
I think in real world experiences, as we started to get these conversations with your strategic, we were able to, at least bounce ideas off of Cypress.
Oh,
What do you
right,
think? Or,
right.
we had another opportunity, I would say in the summer, end of 2023,
Mhm.
that could have taken us into a different path, and so more of services. And
Mhm.
so we talked about it with Cypress and, they gave us their 2 cents and pros and cons, and
Yeah,
we whiteboarded it out,
yeah,
with them. And so, again, that was things I just couldn't have gotten probably from your traditional debt lender,
yeah.
to go to their office or, to sit down and whiteboard something out, as far
That's
as the
great.
strategic direction that we're looking to go.
Well, what did you spend the money on? A little practical funding to start
Mhm.
spending ahead of a little growth. But what did you spend it on that turned into growth that helped you get a better exit here, right? You picked up your growth rate.
Yeah,
What did you spend it on? Were just more salespeople?
yeah,
Oh, okay.
people. That was it. So from the technology side to client services implementation as well, and so
Yeah.
we spend it on great people. Honestly, that's what we were looking for. One of the things we did learn was that for us, anyone who was client facing, that services team having existing private equity experience,
Oh my gosh.
it's huge. It's
Yeah.
huge. If you can, have the conversation with a CFO or whoever, and they don't have to explain to you what a fund is or what private equity is, that's
Yeah.
huge.
Yeah.
That's huge. And so the good thing about it is that obviously it helps, those conversations helps implementations, but a lot of times, those people do come at a premium because they've worked in the industry a bit.
Right.
And so, in order for us to do that, we needed funding to really go after the people with that
Right.
know-how and that experience.
Well, and there's a cost of funding, and you gain some support and advice in there. But looking back, the story is always if I could grow faster, the value of my company accelerates faster, and in 2 years I can create a much more valuable company than if I
Mhm.
didn't raise a little royalty-based funding. In their case, debt-like funding. Did it work out for you that way in the end, or how did that? Looking back.
No, it did because we were looking at growth at a similar time as well too, and so looking
Mm.
at what, giving up 20% of equity, let's say, would cost us
Oh
versus
my gosh! Right.
so what that would cost us at an exit that we wanted to get to versus taking, another round of debt, from Cyprus, and so we were able to quickly do the math there, and,
Yeah,
this was the
and, like,
preferable route.
if you did a I know it was a small amount of funding, so, like, that would have probably cost you $10,000,000 in
Yeah,
equity funding,
yeah.
something like that, or more.
A little bit more. Yeah, yeah.
Yeah,
So that was gonna be
yeah.
considerable.
You
Uh,
know the answer, it's more. So, yeah. Alright, great. Well, congratulations on that, and how long did this, dance, with the Allvue team take? Their first offer, "No
yeah,
thanks, not ready, not now," and, to get to a final offer and close a deal, was this a
it
year?
was weeks, honestly.
Really?
Yeah,
Everybody was ready?
this went pretty quickly.
Did they start with a reasonable deal, or did you have to nudge
No,
them?
they did. They were, very
Okay,
reasonable
they
to
got
start.
your attention.
They got my attention early on,
Oh, look
so,
at that.
we had
Usually
another.
there's the first no, the second no, and then the
Yeah,
third
no,
yeah.
yeah, they
Okay,
got
look
my
at that,
attention,
yeah,
and they came back, did a little bit better, so,
yeah.
that was enough to
A
make us
preemptive strike, as they
a
say,
preemptive
so
strike,
yeah,
so
wow.
couldn't say
And so, weeks to get in the range, and how long did it take to close the deal, finally?
So we had an aggressive close timeline. We shot for December 6th. We closed on December 17th. So all in all, I think we took about close to close to 8 weeks, maybe a little bit less than 8 weeks.
Oh my gosh,
Yeah,
Richard.
yeah, yeah.
Like that, you might have broken the land speed record for a sizable deal like this that isn't being, a crazy boom time where
Yeah,
money's free and, people are just throwing things around and so forth. But everybody did the due diligence. Did you do due diligence on them? Because now you're an investor in this
oh yeah,
company. You own part of the company.
yeah, yeah,
Uh,
absolutely.
you're
So
one of
we,
the main investors. Did you have to go through and interview them to say this is a good home? And if I
I
roll
did.
some of my precious equity, I want to know what I'm buying?
I did. So we spent
Okay.
some time there, as well, understood where they're going and, some of the things they've solved for in the past. And so
Yeah.
I do recommend doing that reverse due diligence,
Yeah.
for everyone. I think also too that, the big sigh of relief, yes, the deal's consummated and it's closed and that's all great, but year end is our busiest time as a company as well.
Oh, right.
So, we were knee deep in our year end close with a lot of our firms as well as doing due diligence. So, November, December, it was, 4 or 5 hours a night sleeping. So, but
Yeah.
we got through it. We got through it.
Yeah. Well, congratulations. Really,
Thank you.
really exciting stuff. And then, the first bite of the apple, the check hit your bank account. Did you, refresh and say, oh my gosh, you know?
Yeah,
Yeah,
you do a little bit of that.
yeah,
You check a couple times a day, like, is that
yeah.
but
Anything else change? Your wife, finally let you back in the house and that kind of thing, or
yeah, no, that was it. I mean, nothing else changed, honestly.
okay.
We
I'm
just
looking for some drama here, but Richard,
no,
you have chugged away at this awesome business,
there's
and
nothing
you caught
else.
the upside, you caught the wave.
Yeah,
You should be really proud of yourself to
yeah,
build something so valuable that people who know what it really is
yeah.
valued it so highly.
I
Um,
appreciate it. Thank you.
yeah. What's the biggest thing that you're going to have to learn in this new? You're not independent anymore. You, I guess, have a boss or people
Mhm.
you report to, and this new regime. It's a shock to the system to go into
Yeah.
a bigger company, and you're not running the show anymore. What's the biggest thing you're going to have to change or figure out, Mr. Change? Um, what's the biggest thing you're going to have to figure out this year that you didn't have to deal with before?
Letting go, of certain
Here
things.
we go. Right.
Yeah, yeah. You gotta like, I mean, case in point, there's a whole marketing team now. So it's not me that needs to put together a PowerPoint deck, look at the logos, the branding, make sure there's alignment, the message. There's
Hmm.
a team that's already started that for me. I can
Hmm.
review, make some notes, they'll go back, update. It's not me at 2 a.m. I'm trying to make sure that,
Yeah.
this is, perfect and ready to present. So that's one of the things I know I'll have to do is just let go of some things.
Yeah. A bit of advice. I've been through this a couple times. The biggest surprise is, 100% is you're growing a company is external, customers and market and everything.
Yeah.
Yes, you have some operations people and so forth. But when you sell inside a bigger company, you realize I got to sell through these salespeople. If I don't convince the sales team
Yes.
what this thing is attention, it's not going to sell. So
It's not gonna sell.
it goes internal,
Yep,
and it's just a big company thing,
yep.
and its complexities and so forth. So you'll be able to get through that, but you got probably a year of a lot more internal than you've ever had to deal with
Oh,
before.
absolutely.
And then you can get
There's
back on the
layers
field
now.
and install it into the DNA
Yes,
of the company with all
exactly.
of that. Well, awesome. Did you buy a prize with any of the prize winnings yet, or do you, the boat or the bigger house or the car you always wanted, or I don't know, something? The
No, I
private
mean
equity watch?
no, didn't, we mentioned, "Oh, well, maybe we can, move to a different house." Our kids are like, "No, we're not
No.
moving.
Isn't that
No,
funny?
we're set.
Yeah.
We're set." So, no, there's nothing, really needed to be purchased or bought,
It's a little ironic for
It
because it's
is.
happened for practical founders here, and
It
I
is.
could kind of plead guilty. Like, you got more money than anybody you probably knew growing up,
Yeah,
and
yeah,
yet you drink, the same water in the same house, and, and life will change slowly, but it
right.
surely will. But like you probably have a smile on your face, and
Yeah,
it's not screw upable anymore. You're on the other
so
side of that, but
looking forward to it.
really interesting. Richard, the last thing we ask founders on the podcast here is what advice they'd like to share with practical founders who, let's say they're in the vertical market and they see the problem and
Yeah,
they're getting started and they say, someday thousands of companies can use this software and
yeah,
it's really valuable. And, they're kind of in the journey of the next 10 years of their life. And maybe they're getting punched in the face with, different things. You got some drafts there along the way, but what advice do you have for them that you give most often?
couple pieces of advice.
Okay, great. Thank you.
One, there's no such thing as the right time. You
Ah,
know, I really believe that now. So the time is now. If you feel like there's an opportunity for something you to capitalize on and something you want to bring to market,
so is that like, the corporate refugee saying timing, timing, timing?
yeah,
You just said, I got to go, I got to start, I got to go do this.
that's it.
Okay. All right.
And you can look at things that are obstacles. Sometimes it's going to be, okay, what do I do about healthcare? And what do I do about
Yeah.
obviously finances, things like that. Those can be solved for, honestly.
Yeah.
And so, I think if you have the idea, the willpower, there's no such thing about the right time.
Okay.
And I think if you're waiting, you're probably missing an opportunity. I
Yeah.
really do. I would think the second piece of advice, once you're in it, once you've made this decision, own it. No regrets.
Yeah.
No one's gonna save you. There's not a fairy godmother that's gonna come and make it and wave all your problems away. You have to own it. And so, I think that's the one thing that you realize is that You kind of end it by yourself here. There's no magic wand that's going to be, to come wave and say, okay, hey, here you go. All your problems solved. And
Well,
that's not,
founders love this, and most corporate employees don't love it at the same level that we do. We will do everything to just have our
uh,
independence, right, and have
yeah,
the ownership at whatever cost. But yeah, I totally hear that.
yeah, yeah. And so, that magic wand in my mind wasn't outside capital, wasn't VC funding.
Yes,
That wasn't the magic wand
yes,
because, what do you do when the money runs out? Is your product generating revenue? How do you continue that? And so,
yeah.
you
Solve
know,
the real problem.
solve the real problem.
Yeah,
If it's a problem to be solved and you got a great idea, you got a great solution for it, you can generate revenue off of it. You can grow that without taking funding. I think you can. There will be a time, sure, for that, but prove to yourself, prove to the world that, hey, this is something that is viable. It's just something that has product market fit, and you can really run with that.
yeah.
Much longer than you think.
Yeah. And you took a little of the Cypress royalty-based funding, debt-like funding, but you knew what the system was, and you knew if you could go a little faster, it would pay
Oh
off
yeah,
for you,
yeah.
despite the cost. So it wasn't like, I'm not sure, I think I'll get funding. You were pretty sure by the time it's like spending more of your own money.
Yeah, yeah, absolutely. I mean, we knew that there were options and opportunities from a funding
Yes.
standpoint, but again, it was, looking at potential exit timeline.
Hmm.
You're really trading and really giving a lot away, if you can go
Yes.
ahead and stick to that timeline and meet it. So
All right. Well, and the timeline came faster than you
the
thought.
timeline
So,
came
so
faster.
sometimes it works that way. I guess
Yep,
that's the proof there, Richard.
absolutely.
Well, congratulations again on
Thank you so
building
much.
a solid and valuable company for the private equity and venture capital industry, and doing it in a bootstrap way and winning a big prize. And I'm sure your second bite of the apple can be much larger. That's the private equity
Yeah,
game here.
that's
What
the
you've
goal
grown.
now.
Yeah, that's good for
That's the
you.
mission.
And yeah, I wish you the best this year. It's your new adventure, a new phase of your adventure. Thanks for being on the Practical Founders podcast, Richard.
Greg, thanks for having me. I really appreciate it.
Thank you.
Take care. Bye bye.
Thanks for watching this week's founder interview on the Practical Founders podcast. Be sure to hit like and then subscribe to my Practical Founders YouTube channel to keep up with my weekly videos for serious software founders who are building valuable companies without big funding. Check out my blog and information about my Practical Founders CEO peer groups at practicalfounders.com. And follow me on LinkedIn to keep the conversation going. See you next week.